No one could have predicted 2023 was going to be such an amazing year for the stock market, but it did, and most of that was towards the end of the year. However, the beginning of 2024, things have slightly changed, with the S&P 500 down nearly 1% and the FTSE 100 down by over 0.5%. But as a long-term investor, I don't care about the fluctuations in the market, and my Invest Engine portfolio doesn't change regardless of what happens on the outside. So in this video, I'm going to show you what has happened to my Invest Engine portfolio since the beginning of 2024. So this is my Invest Engine account, and as you can see, my total balance is significantly higher than last update at £56,273. So like I said in the beginning, my Invest Engine portfolio does not take into account anything that happens in the news or the economy. I'm just investing for the long term. In fact, 20 years at least. And in this video, I'm going to show you all the holdings that I have and how I managed to increase my portfolio balance significantly since the last video. Now, as you can see, my return is also significantly worse. Last month's update, I had maybe over £200 in the green, and now it is over £750 in the red, and I'm going to be explaining that. So as you can see, I have now completely transferred my ISA from Freetrade into my Invest Engine account. You can see that it says my remaining balance is £20,000. This is because I've transferred my ISA in full from the past 2 years, not the current year's tax ISA. So this is years starting 2021 and 2022. So if I go into it, you can see my portfolio balance is 54,004 pence, and I have £1 in cash. Auto Invest is off. I'm just going to quickly switch that on because I actually do want Auto Invest to be on. So if you don't know what Auto Invest is, basically if you have any spare cash as small as £1, Invest Engine will do the rest in automatically reinvesting that. I'm activating this because it is one of the best features, in my opinion, for an automatic investor. The older I get and the more portfolios I have, the more I realize that I actually want to spend less and less time on this, less thinking about the market, and just invest in something automatically. And this is exactly why I've chosen to move my ISA to Invest Engine, as it makes everything very automated and it makes it incredibly hard to actually time the market. Now, if you want to start or resume your investing journey with Invest Engine, use the link in the description down below, and when you do that and you top up £100, you will receive a bonus of up to £50, and that will give you a little kickstart on your journey. And in my opinion, Invest Engine is the best platform for ETFs, as they charge no platform fees currently, which is lower than Vanguard. You can get the same funds from Vanguard, you can get funds from iShares, you can get funds from Invesco, and essentially build your own portfolio and invest the way that you want it to. And it doesn't encourage you to time the market because it's just ETFs, and executions don't happen rapidly, which puts you off from timing the market, and I think that is a positive thing. So anyway, in my ISA, things aren't looking good currently because, of course, I transferred my ISA initially as an in-specie transfer, so I had the funds from my Freetrade account, both in the GSPX and the FTSE 250 from Vanguard. However, as the market actually triumphed towards the end of 2023, I actually couldn't help myself but sell off these holdings into cash, and so I transferred my ISA in full in cash, and since then I bought back into the S&P 500. As you can see, here is my net contributions. So I transferred around 55,000. I am down at nearly £1,000, but that is no matter. I've invested into the S&P 500 by iShares. As you can see, I bought around £8.10, which is actually the peak of the market at the beginning of 2024. But like I said, I don't really care about timing the market. Since then, the S&P 500 and the GSPX has gone down quite significantly, down by 1.63%, leaving me a loss of £954, which is not something I'm gonna worry about right now. I like that it shows you your average purchase price, very easy to see, at £8.11. Again, I picked the peak of the market, which just goes to show that trying to time the market is a fool's errand, and it is almost impossible to continuously do so whilst also being happy. But in any case, this was only bought on the 29th of December, so the last trading day of the year, and since then, beginning of 2024, S&P 500 has not been doing too well. We can see over the past week, down by over 0.7%. In any case, I wouldn't have received any dividends as this is a very new investment, but I do have 6,774 shares in the S&P 500, and I'm confident it will go up, so I'm not really worried about my total return at this point in time. Now, what I really like about Invest Engine is the ETF breakdowns. You can actually find out by percentage, by weight percentage, just what companies are in here. For example, Apple 7.3%, Microsoft, Amazon, Nvidia, Magnificent Seven are all there, which are driving up the price of the S&P 500. You can also see what sector you're investing in. I'm not going to go through that now. You could always download the app. You don't have to top up anything. just check out the ETFs. And then if you want to later down in the line, you can always invest later on. So I like the fact that it shows you my net contributions. Again, I'm currently down by 1.7%, but this is just because we've seen a small dip at the beginning of the year. Now, I have a few portfolio cards here. As you can see, with Invest Engine, you can actually make your own portfolio. You can just customize it just the way you want it to. And I've done that, put it into separate pots. So before, when I had £100 spare each month, I would put it in my Invest Engine portfolio. And this £100 would be not timing the market. It will be every month at the same time. And I wanted to just see, as an experiment, what my portfolios would grow for someone that invests only £100 a month. So for the rest of the video, I'm going to go through my £100 a month portfolio and see how it's doing. So my first portfolio is the VUSA VJPN. As you can see, I haven't invested in it for a while, but you can see I invested a lot back in the day. So this is almost a 50-50 split between the Vanguard S&P 500 and the Vanguard FTSE Japan. You can see that since investing back in August of 2022, my portfolio is up by a nice 17.81%. That's a return of £28.85. What I like about these portfolios is that you can always override whichever ETF you want. So for example, if I want more in VUSA, I can just buy and sell in VUSA. You can see also that it tells you the price you bought it for. So if you consistently average your money, you can see that over the times you are buying increasing amount of shares, and sometimes you are reducing the average buy-in price, which over the long term is really going to help you benefit. For example, if I kept on buying, you can see the stock price is consistently increasing. But remember, past performance is not always the best indicator for future results. In fact, there's no guarantee. Your capital is always at risk with investing. So the last time I invested in the FTSE Japan in this portfolio was back in November 2022, and since then it has gone up very, very nicely. So everything that I bought at this price was actually a bargain, and since then it's just been increasing in capital appreciation, and I don't really have to do anything. So in this portfolio, you can see my dividends paid is £4.33 in total. You can see that back in June I received the highest amount at £1.25, and the last time I was paid dividends was back in December 2023, just last month, and that was £1.07. So the second portfolio I have is the VUSA VJER. You can see here with my net contributions a lot higher than my net contributions the last time I invested into this portfolio was February 2023. You can see it's a 55-45 split between the S&P 500 again from Vanguard and the Vanguard Germany All Cap. In terms of dividends, you can see I've been paid £2.06 since I've held this portfolio, the largest being again in June at £1.17. So if I go into the Germany All Cap, you can see that I kind of bought it at the peak, but it doesn't matter. You can see that even then it is up by 21% in just my Vanguard Germany All Cap position. It's easy to see what your individual positions are gaining you. For example, in this particular instance for the Vanguard USA, in this portfolio it is up by 8.46%, so that is a return of £5.12. You can even see individually what each position has given you in terms of dividends. So for example, the S&P 500 in this portfolio has netted me 81p in terms of dividends. So my next portfolio that I have is labeled GSPX. So this invests solely into just one fund, one ETF, and that is the iShares S&P 500, which is a hedged version of the S&P 500, which is more like what the returns the Americans are getting back in their country for the S&P 500. This is because the fluctuations between the pound and the dollar are more stabilized due to the hedging effect, and we see a closer profile to what we actually see with the main index. In any case, I have 143 shares with them, and currently my return is a nice 19.1%. That is a positive return of £122. You can see that over the past year, this index has returned over 20%, which has been absolutely amazing. One of the best years the S&P 500 has ever had. This was after investors at the end of 2022 said that 2023 is going to be the worst investment year ever. This is why you do not listen to these people and you diversify, which is very important in having an ETF, is the diversification. Although I heavily invest into the USA, going forward that won't be the best bet, and I'm looking towards actually diversifying even further by getting some sort of a global fund and sticking with that. But in any case, the returns of the S&P 500 has made me very happy, and I'm very glad to have been invested into them in 2023, regardless of where the market was going. So in terms of dividends, I've received so far £10.68. The S&P 500 is not known for a high dividend yield, and it is something around 1%. I've received £5.42 back in September, and I'm going to receive one soon. That will be next month. The GSPX does only pay biannually, so twice a year, but I don't invest into these funds just for the dividends. And in any case, the dividends are going to be reinvested using the auto invest feature from InvestEngine. Next, I have a portfolio called DAX, and this only has one fund, which is the Vanguard Germany All Cap. As you saw, this was in another portfolio too, but I decided to just try to track on its own. Only invested at 2 points in time, back in February and in November. Again, the Germany All Cap has been doing all sorts of stuff, so long term I don't think I'm going to be putting much money into that. But in any case, the portfolio is up by 0.38%, not a huge lot, and that is a return of £2.75. In terms of dividends, 3 dividends received with a total of £1.47. Here at the bottom, I have a portfolio called FTSE 250. And during 2023, this was one of my most fun ETFs due to the high volatility. If we go in here, you can see that over the past year, it has been going up and down all over the place. You can see I bought many times during when it was going down. And the last time I bought it was in October 2023, so not too long ago. And since then, it has absolutely soared. So overall, this portfolio, I am up by 5.98%, which is quite high, not anything compared to the S&P 500. And that is a return of £27.15. In terms of dividends, FTSE 250 does have quite a high dividend yield, and I've received £10.62 in total from dividends. So let's look at the analytics behind the portfolio. If you have InvestEngine, it's very simple to do that. There's only 3 buttons at the bottom. Click the one with the 4 squares, and at the top we just press analytics. Here we can see the 6 regions that my portfolio is in, and as you can see, it is very America heavy, very North America heavy, with 93.2% in America. Not surprising, as most of it is in the S&P 500, but you can easily see what sectors I'm exposed to. So industrial, we're talking about 27%. If we actually click into it, we can see a breakdown of how these are exposed to this certain sector. So for example, industrial equity, manufacturers to engineers to car makers to defense firms, companies that produce machinery, equipment, industrial supplies, for example, companies like Ferguson, Ford, BAE Systems, Airbus, things like that. I love the fact that it actually tells you which portfolio you have these holdings in. For example, my ISA, 26.7%, and even tells you your pound amount. So that's £15,034, basically allocated to some sort of industrial sector. If you click onto that, even you get back to your fund and you can actually buy and sell based on if you're trying to balance your portfolio in terms of sector, you can easily do that. Next is technology. So you'll know by now that the S&P 500 is very technology heavy. As you can see, 24% from the S&P 500 is in technology. Other funds such as the FTSE Japan, you can see overall in my portfolio only 0.1%, but then again, it's because my holdings are a whole lot less. But anyway, if you want to check out what sectors you have exposure to, you can easily do that. As you can see, currently I have 0 bonds. As I'm below the age of 50-ish, I will do 100% stocks as I have a higher time horizon. In case something happens and there's a big crash, I can wait that out. So there's no point of having bonds right now, in my opinion anyway. You can see financial, consumer, healthcare, energy, and it's very easy to see what sectors you're exposed to. In terms of holdings from my ETFs, I am currently exposed to 1,409 different companies. You can see that by far Apple is my biggest company, and if I were to individually make all these ETFs by selecting individual stocks for them, I would have £4,036 invested in Apple. And of course the Magnificent Seven here, most of them anyway, I would have the majority of my money in there. This just goes to show that I am exposed heavily towards one sector, so if there are fluctuations within those sectors, my portfolio is going to be hammered quite greatly. This is why in the future I am going to be looking to diversify, and going forward, as this is my long-term portfolio, I'm going to be looking at global funds with less of an emphasis on America. So I'm going to try to find one that has exposure to global markets and just buy into that very, very consistently. But in any case, this represents the most amount of money I have in one platform, and I'm very happy I chose InvestEngine. Because I can't really time the market on this, it's a very good thing for me to put my money in here. And also because my ISA is maxed out, I'm not going to be able to change any of these holdings here. And I will update you month on month if you're interested how my portfolio is faring. If you're still interested in the £100 a month experiment, let me know in the comments. Otherwise, I might stop depositing in my InvestEngine account and just see how the value changes without any additional investments. So make sure to check out some of my other videos, and I'll see you in the next video.